Hey guys, welcome to the Rat Grind channel. I just wanted to do a quick video today just to show you some of my strategies on investing in stocks. Majority of it is on ETFs. Like I mentioned in another video that I was going to do this, I wanted to show you how I do it. I'm a newbie to this, so don't think that I'm an expert or anything. I learned from a lot of different YouTubers as well as reading a lot of tutorials online on how to be able to do it. I set up a Robinhood account, which I'm going to link in the description below, so you guys can be able to check it out. It's a platform on your cell phone. They have iOS or Android that allows you to trade without much fees, or actually with zero fees. So you could be able to get in and out of a trade or a stock rather quickly and relatively inexpensive. One thing to keep in mind, the way they make money, because you might be wondering what's the catch? Why are they free? It's because they allow you to do option trading, where basically you borrow money to be able to invest more. I don't suggest you do that unless you already know what you're doing. But if by all means, if you're a traditional stock trader that does it on a regular basis, then maybe you could do that. And they charge you a specific fee every single month to be able to access more capital, basically. Like I mentioned always on this channel, none of the stuff that I do is financial advice. So don't copy what I do. Do your own research and, just use me for entertainment purposes, just to see what I'm doing. You don't copy me. Find stocks or cryptocurrencies, coins, ETFs that you find value in, and invest in those and see how that works out for you. So my goal, like I mentioned yesterday, I use this calculator online, Compound Daily. So I want to be able to I started out with $200, a little bit over a month now. A little bit over a month. And my target is to earn about 1.5% per day, right? So that's really my goal. And if I do that, as you can see, my goal is to be able to take my $200 and turn it into $25,000 so I can actually do pattern trading. Now, pattern trading, for those of you that didn't watch my video yesterday, it's basically when you basically day trade for more than 3 times a week in a length of 5 days. So basically, once that happens, your account gets locked for about, I think, 90 days or so. So Robinhood has a function that locks your account, that basically prevents you from going more than 3 in a 5-day period, so that you don't get flagged to be a pattern day trader, because it's more problematic. For you to be able to avoid that, you either don't do it, like what I do. I swing trade. I leave my day trading to when there's a big gain that I feel it's gonna drop. So I leave that out for that time, or for stop losses where I bought into something and it's just dropping, so I want to get out of my trade so that I don't lose all my money. That's when I use it. So whenever I trade, I already have a target goal in mind. Like I said, if I could be able to earn 3 to 4% of my investment on a day-to-day basis, that's what I want. I'm not always going to get that. So that's why I want to average about 1.5 over a period of 1 year. Now, weekends are not included in this, although in cryptocurrencies you could trade on the weekend as well. But here you're basically trading. I'm in Southern California, so basically my trading time is between 6 a.m. to about 1 p.m. So usually I sell my positions. I sell my positions during, after when I'm eating breakfast, after my wife and I get back from the gym. I usually read up on news, listen to news while I'm on the bike, or doing my cardio, so I can get up to date a little bit of what's happening in the market, and then I'm going to execute my trades as soon as I get home, as soon as the opening bell opens, which is 9 a.m. Eastern Standard Time. So if you are in the Eastern Standard Time, then 9 o'clock would be it. And then I usually sell, at that time, or maybe if it's still going up, I'm gonna wait, check it while I'm in the office. Every so often, maybe when I have a break, I'll go check out my positions to see, or I put out an alert on my phone to make sure that when it hits those numbers, I can be able to to sell them off. But then I buy in. That's my strategy. Don't follow me if you don't feel comfortable with it. But I usually buy overnight. So like today, before the market closed, about 10 minutes before the market closed, I've been watching a stock. I'm still investing right now in gold. I'm trading gold, which I'll show you the gains that I made today over the weekend. Basically, I bought these two stocks end of day before the end of market last Friday, and then I sold them this morning. So I'll show you what my gains were for those. And then I got back in, I looked at it, and it's within the gold ETF space. So I bought back into a similar stock to see if it's going to go up over the course of the night and up to tomorrow, because I feel that I find a lot of value in it. And I feel that it's oversold right now. So I think that it's going to pop back up. It may go down a little bit more, but I put my stop losses in a certain way where I basically lose half or I gain double. So that's basically the rule that I go into when I do these investments. All right. So again, $200. I'm trying to make it to 2,000. To 25,000. So if I keep this on a consistent basis, I trade within 365 trades, it's going to be 45,000. If I exclude weekends, I want to calculate this because, again, I don't trade during the weekend because the market is closed. So I'll show you by the end of the year, let's say December. Let's see here. By December of 2018, by end of right here, by December, my $200 will, hold on, let me see. Oh, it changed the date because of the lack of the weekend. So by next year, it added the weekends because there's a lot of 511 working days. So about a year, by end of December, I'll be at about 2,000. But if I just let's say I'm going to include the weekends. Let's just see for how many days I need to be able to get by the end of the year. The end of the year would be about $8,000. So I'm gonna try to make it to that point. So either around anywhere between $2,000 to $8,000. But if I grow this position, if I'm able to do 2%. On a day-to-day basis, I'll be able to earn $275,000. Now, that's crazy money. Like, that's impossible. That's gonna happen because I won't be able to trade every day, and I'm gonna have losses where I give up some of my gains. So, I had to look into those factors to see where I'm gonna be. But my target goal is only 25,000, and in my calculation, that's very, very doable for me to be able to get there. So, I just want to be able to day trade next year. So that I can be able to get in and out of a position without having to worry about being labeled a pattern day trader. All right, so that's what I do. So I just wanted to show you guys a video real quick on what ETFs are. I'm doing ETFs because I don't know a lot about the stock market. I don't know a lot about the stocks that I'm investing in. I mean, we all know about the Amazons, the Facebook, the Microsofts, the big guns. But there's so many stocks out there. There's so many exchanges out there that it's quite confusing. So I basically buy into markets, right? So let me show you this video real quick so that you can be able to get an idea of what an ETF is. It's basically a stock, but you're buying into a group of companies instead of a particular company. And this allows me to sort of read up on news on a more industry level. Like, for example, if the stock market was going down, usually gold goes up, because people move into more gold-based assets. And when the stock market is doing good, so the gold price goes down. So if I invest in an oil ETF, for example, and there's some form of embargo, or there's like something going on where we're gonna lose out on access to oil, then then maybe the price of oil will go down. So I'm gonna invest in a bear ETF because I'm predicting that it's going to go down. So you could be able to play those markets either way, but I'm going to show you what it actually is. So give me just 1 second. I'm going to play this video out for you guys. This is about 4 minutes long. so that we can be able to learn together.
An exchange-traded fund, or ETF, is an investment fund that trades like a stock. ETFs, like other types of funds, pull together money from investors into a basket of different investments, including stocks, bonds, and other securities. By spreading the fund's money into different securities, ETFs can generally provide investors with diversification, which can help balance risk. And because ETF shares are traded on a stock exchange, they're bought and sold like stocks, and usually incur commissions and other related fees. Just like there are a variety of mutual funds, there are a variety of different ETFs, each with different objectives. Some ETFs invest in a variety of stocks and bonds. Some replicate the performance of a stock index like the Dow Jones Industrial Average or S&P 500. And others track the performance of a particular market sector like technology or pharmaceuticals. However, different ETFs offer different amounts of diversification. For example, ETFs that focus more on specific sectors typically offer less diversification than those that are designed to replicate an index. Let's look at an example of investing in an ETF. Suppose an investor wants to make a diversified investment that is designed to mirror the performance of a major stock index like the S&P 500. After researching different ETFs and finding the one he wants based on his objective, he purchases shares of it through his broker, just like he would an individual stock. Now that he owns shares, the investor has a stake in each of the fund's basket of investments, while only having to purchase one ETF. Participating in the wide market with only a single purchase instead of multiple purchases can save an investor research and analysis time. So, how can an investor potentially achieve a positive return from the ETF? Similar to a stock, he can earn a return two ways: a rising ETF market price and dividends. Typically, if the value of the ETF's investments increases, so does its price. If our investor purchased a hypothetical ETF at $40 and a year later it was selling for $50, our investor could profit $10 per share by selling his position. Of course, if the ETF's price dropped, our investor would have lost money if the position was sold at the lower price. Because many ETFs are traded on a stock exchange, they can be bought and sold throughout the day. However, not all ETFs are widely traded, which can cause difficulty when trying to fill orders. Now, compare this to a mutual fund. Most mutual funds are only priced and traded at the end of the day. Separate from changes in price, our investor could potentially gain income if the ETF pays its investors a dividend, which is a payout of part of the fund's earnings and capital gains. Not all ETFs pay dividends. Many, instead, reinvest earnings into the fund's holdings. One of the ways to tell whether a fund pays dividends is to look at what's called its dividend yield. This yield is the amount that the fund pays out compared to the current market price of a share. ETFs have other attractive qualities. While most mutual funds require a minimum investment, which can be substantial, an ETF investor can just buy a single share plus any commissions and fees. Also, because most ETFs aren't actively managed, they typically have lower management fees than mutual funds. There is a wide variety of ETFs that attempt to track assets like corporate bonds, stocks in remote countries, commodities, and even currencies, among many other investments. While these assets carry unique risks, the ETFs that track them offer investors a practical way to analyze and potentially find opportunities in a number of markets. Want to learn more about ETFs and other investments? Continue exploring premier education brought to you by TD Ameritrade.
All right, guys, I hope you guys found that useful. I use TD Ameritrade. I set up an account. If you're in the U.S., I suggest you set up an account. It's free. You don't have to start trading or anything. They offer paper trading where you can actually, that's what I did to begin with. You get, I forgot, I think like $10,000 in paper trade, and you sort of trade those in and out of the market to be able to figure out what it is that you want to be able to invest in and sort of learn what stocks or what the ETFs you want to get in on. That's what I did. And then what it also does is once you don't paper trade, you don't have to execute the trades on TD Ameritrade itself. That's what I do. I don't execute them there. I buy them on RobinHood because there's no fees. With TD Ameritrade, of course, you have to pay for the trades, which is a normal thing in any brokerage account. But for RobinHood in particular, like I said, it's for free. So I look at I analyze the stocks on TD Ameritrade, and I execute my trades on the Robinhood platform, which you can see above me. I'm casting my phone here so that I'll show you how it works and how it looks like and stuff like that. And I'm also going to provide a link in the description below so you can get your own account. You can get a free stock. When I got started, I got one Zynga stock. You can get a stock from Facebook, Microsoft, or anything like that. We both get one. So if you're gonna set up an account, please, use my link below. Support me. It doesn't cost any money because it's free, like I said. But we both get a free stock to start with, and that's how I got started. I got like a $4 stock that I then sold when it went up because I didn't know any better. So that's what I'm doing. So just to show you guys the different ETFs that I'm buying into. So there's a lot of different ETFs, right? Let me show you guys. So there's bond fixed income ETFs, commodity, currency, equity, alternative ETFs, inverse, leverage. So there's a lot of different categories of ETFs, right? If you go to etfdb.com, you can see a lot of them. It provides you a lot of research opportunities to learn what they are. The video was talking about like S&P 500, for example. You could see ETFs here that are betting on the performance of that market. These are the top 100 ETFs by trading volume. You can see a list here. But what I really like these direction ETF funds. Gold, there's daily gold miners, junior gold miners. You could do energy, natural gas, oil and gas, real estate, semiconductor, a lot of different industries that you could be able to basically choose from here. So these are some of the ETFs that I've learned to follow and learn to trade. I'm sure I'm going to get into other ones at a later point in time, but here, the reason I like these ones, I'm not sure maybe all ETFs are like this, but I like these direction ones because if, for example, gold is going down, I know that it's going to go down because the stock market has been killing it, right? So I'm going to invest in like DUST, like dust. This is NUGT. This is a bull share, so I know that it's going to go up because bulls, when there's a bull market, if you don't know, the bull market means that the market is going up. If it's a bear market, the market is going down, right? So just keep that in mind. So instead of me trying to analyze all the people, all the companies that are associated with this, I just look at the whole ETF and predict like, okay, well, if the market is going to go down today because it's, the stock market is going up, then I'm going to invest in DUST because it's going to be a bear market. So then the price of that is going to go up. Now, if I know that the stock market is going down, then it's going to be a bull market. So I'm going to invest in gold this way. So if there was a news, like there was a big news, I don't know, a couple weeks ago. My brother is in semiconductor. He's in Singapore. He's a semicon engineer. So there was a big fuzz about Broadcom and they were trying to buy a company, and so that was it was kind of putting the whole industry on hold, and there's a lot of uncertainty that was going on. So you could be at that time you could be able to trade these daily semiconductor bull shares or bear shares, right? So that's the type of opportunity that you could be able to do. So check these out. You can go to Direction. This is the spelling, directioninvestments.com. And then you can, like I said, set up a TD Ameritrade account. If you're in the United States, it's for free. You go ahead and do that. So another tool that I use to check out what I want to be able to invest in, like one of the things that I invested in just at the end of the market today was JNUG, right? I'm going to show that to you. It's in this list right here, JNUG. It's Daily Junior Gold Miners Index Bull Share. So I invested in this because it went down today, and all the technical analysis. If you don't know how to do technical analysis, which I'm a very newbie on, it says strong sell on pretty much everything, right? It reads a lot of the moving indicators, a lot of the different technical indicators that indicate when the market is oversold or overbought. It tries to predict what's going to happen. I mean, there's no exact science for you to be able to know all these things, but this sort of gives you a tool to be able to make more calculated, more intelligent decisions when you have a thesis in your mind of if a stock is going to go up or it's going to go down. So for here, it's strong sell. Usually for me, when something is a strong sell, that's a sign for me to buy in, right? When it's a strong buy, it's the sign for you to sell, which is kind of weird, but that's just the way it's worked out for me. Maybe that's the way it's meant to be. I just don't know any better. Hold on, just guys. My headset just came off. All right, I hope you guys can still hear me. I'm sorry about that. I accidentally pulled the headset off. So like I was saying, I use investing.com, another resource. I use it for my cryptocurrency as well. You could be able to. It shows you all the technical trades. I mean, technical analysis for you. Let me show you guys something. And this is how I learned how to do very basic technical analysis. So it looks at all the different like Fibonacci sequence. You hear these all the time when you talk to these expert guys on YouTube. I'm not no expert, so I just look at it. I know how to read an RSI. I think I showed you guys that on a cryptocurrency trading video yesterday. So RSI, relative stock index, relative strength index, and it's sell, right? So when it's a strong sell, it means it's oversold. I told you guys when it hits 30, that means it's either gonna bounce or it's gonna plummet down. It means it's extremely oversold. When it's oversold, of course, there's nowhere else but go up. So you're buying the bottom. Now, if this was close to a 70 or above a 70, that means it's overbought. So it's probably gonna tank down. So it looks at all of that. So the stock RSI, it says right here, oversold, right? The less volatility, it means that, there's not a lot of movement in the market. But I saw that it dropped about 6% today, like as you can see here. So like I told you guys, I want to earn just 2% to 4%, right? So that's right up my alley. Even if it goes up a little bit, I'm good. If recovers the price that it dropped today, then I would have, made more money than my 4% return. So use this tool. Just type in the stock that you guys want on investing.com, or if it's cryptocurrency, you just type the pair here, like Bitcoin or Ethereum and all that stuff. You could be able to get all of that. And they also do they also do news, right? Like the February 25th was the last New Year's news here, so it's quite old. But I want to show you guys another thing. We were talking about candlesticks yesterday, right? This shows you candlesticks and allows you to read them. It tells you, okay, these are the last patterns that happen, right? It's an inverted hammer, so it can tell you that, oh, it's red, or it's green and stuff like that. So if the price is going up or going down. I suggest read up on candlesticks, right? Japanese candlesticks, so you can learn. There's different names to these. There's like a bearish, there's like a spinning top, there's like a hammer, like inverted hammer. There's a lot of these different things, but you don't need to really get into that. Don't get paralyzed in analyzing these stuff. Just do it, guys. Just do it. I was paralyzed for a long time because I was so intimidated, thought that I had to learn all these smart things. I'm not that smart, so I wanted to learn all of them before I got in. But when I realized what cryptocurrency did for me was it allowed me to invest $20 and play around with it, lose $20, gain $20, and so on and so forth, so that I could be able to be comfortable and actually applying the same knowledge into being able to do stock trading, right? So that's what I've been doing, guys. So now I want to go into what I traded today, okay? Let me show you guys. If you turn to... All right, so sign into RobinHood. I have the RobinHood app here. So basically, you can set it up where it's fingerprint, so it'll recognize only you. So I'm gonna show you guys. I started with $200 in this account, guys. So I want to show you, just to give you some context. It's a little bit over a month now that I started, but in a month, I gained about 16%. That's not that much, guys. That's not that much because I incurred losses. See right here? If you see this chart, I was going up, and then made a bad call, and it dropped. And then I had to recover back, and as of today, I was able to fully recover back the losses that I incurred. But still, 16% over a period of a month, guys. That's pretty good. Like I told you guys, in a year's time, your savings account will probably pay you less than a percentage, right? And if you watch the video, the one that I shared with you guys yesterday, the full episode, you can understand that the banks, for every dollar, for every dollar that you deposit into your bank, or anybody deposits into a bank, because of the fractional reserve lending, they can in turn lend 80% of that or 90% of that. So you're losing out a lot of money. But think about it, they don't pay you enough interest to use your money. Right? So why would I leave my money in my savings account? I mean, this is not financial advice, guys, but please do your own research, study the market, understand, have more financial intelligence, because they don't teach this stuff in school, guys. I wish they did, but unfortunately they don't. They just don't, even in college, unless maybe you take an economics course or you're an economics major maybe. But for a regular guy like me, I'm not that smart. I didn't go to an Ivy League school, so I don't know a lot of that, and I was so intimidated by this stuff. So like I told you guys, I purchased JNUG today, right? So as you can see, I purchased it right here. It went down. I purchased it right at the end of the trading, before the trading ended. Right now, I'm about 0.02 at a loss because I bought it like right here, right? I bought it right here before the end, and it went down. And it's sort of, it's after hours, so it went up and down just a fractional bit right here. So tomorrow, I expect, if I can see the weekly chart shows me that it's been going down, but it can recover, guys. It can recover, and it's currently oversold. I'm gonna show you how I know that. But before I do that, I'm gonna show you the trade that I did today. Okay, so last Friday, I got into these two stocks. I got into DRIP and JDST. So let me show you. On April 20th, this was Friday, I bought DRIP, DRIP, at $149. And today I sold DRIP for $154. So that's about $5 return, right? But that's I know I'm only talking about $200 here, guys, or $150, but if you put this in context, if you have $1,000 here or $5,000 here, this could be significant, right? I'm not talking about the gains in the dollar figure, but the percentage figure, right? And I got into another trade, which was JDST. I bought JDST at $95, right? I bought JDST at $95, and I sold it for $100.70. And today, I purchased 18 shares of this ETF JNUG today. That's what I told you. I paid $258 for it. But I want to show you my portfolio. So today, look at that, 4.15%. So when I show you guys that you can earn more than a percentage, 2%, 3%, 4% on your investment on a day-to-day basis, it's the truth. This is proof that it works. It doesn't always happen that way. Like I said, I've lost 5%, I've lost 2%, but that's why you have stop losses in place. So when you're buying stuff, you put stop losses in place so you don't lose more than you can afford, right? So if I put my stop loss, I bought this at JNUG. I bought this at $14.35. I set up my stop loss at $14. So if it dips to $14, I'm gonna sell. It might go up, but I'm gonna take that loss, because the 35-cent loss per share, because I want to minimize my loss, right? But there's the upside to this is quite high. I mean, it's over the month, it's been trajecting high, and I think this is just a correction, guys. It's just a correction. As you can see, it dipped down, but I think it's gonna go back up. Like, see right here, when it dropped that low, it started going back up again. But I'm swing trading these. I might not sell it tomorrow. I might sell it in a week. I might sell it in a couple of days, or I might be able to sell it tomorrow. But when I do, it's about getting those percentage gains, like I said. And I started out with $200 on this account. Now I'm up to $260 over a 3-month period. It's less than 3 months actually, because of the fact that I've been trading for over a month. The chart only goes up from 1 month and 3 months. But I've earned 18% in the last 3 months and 16% in the last month alone. So that's $36 in return. So if I had $2,000 here, I would have earned, $360. But like I said, I'm growing my $200. I'm gonna be patient. I'm gonna write it out and make sure that I can be able to get those percentage gains and get my pattern day trading limitations taken off by next year. So I'm going to show you guys the ThinkSwim platform that is free for the TD Ameritrade. This is it, guys. So this allows you, I know this might be intimidating to some of you, but this is like the trading view that I was showing you guys yesterday. So it allows you to look at the stocks, add tools. I have my RSI here. I have my MACD. Again, the RSI is relative strength index. It shows here, see when it's down here under this line, under 30, that means it's oversold. When it's over here, it's overbought. As you can see, if you bought down here when it was blue, look at this, guys, right? I hope you guys see my cursor. You bought it right here. This was on Wednesday, okay? This was Wednesday. Excuse me. Wednesday, and then you waited for it to hit when it's oversold, overbought. So within this time period, guys, you would have earned, if you bought down here, you waited for the confirmation, you bought down here, and look at that, guys. I hope you can see this. That was a 9%. That was a 9% gain, right? And then you did that, and then you waited. You don't have to trade every single day, and sometimes not trading is actually a good thing because you want to be able to wait for the opportunities to come to you and not FOMO and just just buy just because of the sake of buying, and you get so scared. But even if you see, guys, it doesn't have to go down here. As you can see on this particular chart right here, it didn't break through the lower RSI of 30 like today. It did, but you don't have to. See right here, if you bought it down here, you waited for the confirmation and it was going up, and you sold up here when it was oversold. Look at that, guys. 18% over a 6-day period. Now you're swing trading, guys, so you don't have to sell on a day-to-day basis. You can wait. Think about it. In 6 days, if you put $100, you would have made $18. If you left your money, your same $100 in the bank, you can wait for a year and you will not earn 18%. So just think about that. So today is a big correction, it seems, right? Because the stock market was doing better, so the gold price went dropped. So the last time that happened was around here. This was like I was showing you guys in the chart on Robinhood. Let me show you guys how that relates. So the last time that happened, as you can see, that was here, right? The last time that happened, it started going up. It happened, go up, it dropped a little bit, and then went up again. So I'm hoping for the same thing. I know I'm not an expert, so I don't know exactly what's going to happen, but that's what I'm betting that's going to happen. So I hope it goes up, but even if it goes down, there's some support down here. So I could be able to make set my stop loss at $14. If it hits this, I'm going to sell. I'm going to buy in again and then wait for it to go up. So that's what I'm doing, guys. So it's pretty easy. So this account right here, this TD Ameritrade ThinkSwim platform is free. If you have a TD Ameritrade account, this is where you basically sell your positions and buy in and analyze and stuff like that. And you could be able to. There's a lot of tutorials online about this. When I'm more comfortable, I can set up a tutorial for this thing to show you guys how it works. But you can find a lot of this on YouTube. So that's pretty much it, guys. I hope you learned something valuable there and you saw what I did. Let's see what happens on my JNUG call right here. I'm gonna when I do sell this, I'm gonna put out a short video just to see how much gains I had. I think I'm gonna probably earn. My goal is to earn about 4% on this particular trade. I put in all my $258, so I'm locked in. I can't do any trades. Usually I do two. I usually do two stocks so that if one goes up, one goes down, I still am trading. But I really felt strongly about this call, so I just went all in and put in all my $258, almost $260 into it. So I'm hoping that that's going to happen. Again, so use the compound daily to figure out your gains that you want to be able to earn. Investing.com is a tool that I use to do technical analysis. Go to ETFDB to find out ETFs that work out for you. The ones that I love are directional funds. And again, I'm gonna you can Google this, guys. You can Google this video. It's called Investing Basics ETF from Google. So I suggest you go ahead and do that. All right. Well, again, I really appreciate your time today. Thank you so much for giving me the opportunity to share with you my trade for today and how I earned about 4% in, you know, about a day. So I hope to see you guys in the next video. Until I see you again, I hope you and your family have a success-filled day. Thank you.